Hello, this is John Kvale, and this is our Q1 2023 newsletter, and it's a multiple take newsletter. We've had a little technical problems, battery problems, dog problems. I'm at the house. This is a Tuesday, the 27th. I will post this with a little luck tomorrow. Google has changed their free copyrighted music download, and I'm having a harder time finding it. Yes, I'm wearing a headband twofold. It's 20 degrees outside. Well, it was 20 when I woke up this morning. As wind chill felt like 15. Yes, this is the same area of the country that had 60 plus days over 100 or 105, whatever it was. I'll throw a picture of the dogs here. We have a pier and beam home, and it gets cold. Also, my hair was a little shabby, so this kind of hides it, and I can hide behind that. Let's get going. The show must go on. Have some interesting things here. In this video, those of you that are newbie, which we have quite a few of, I want to let you know that what I like to do with this is give a little context of what I was thinking when I wrote these. These are all original articles, and I pieced them together. And I do this in a video, audio, podcast type of format with a little bit of humor. Hopefully, you find some of the humor. And I always say this, I do it to where you can listen to it if you're driving down the road, but to be safe, keep your hands on the wheel. So let's be safe and let's get going. Interestingly enough, this posts, those of you that are in listen-only mode, I'm looking at the way this posts to our website. It's really cool. It shows the whole, you can slide up and down on the blog post. It's the whole newsletter with a slider bar. Unfortunately, that doesn't come through in our emails. The servers knock those out. It is what it is, but if you go to the website directly, you'll see something different than you see on your cell phone. Personal reflection. I've never done this before, but as I enter, maybe it's as we enter the 36th year of doing this, as I enter my 36th year of doing this, this was a really unique year last year. The Federal Reserve raised rates more and faster on a percentage basis than they ever have before. And with the cover of a higher, longer CPI, which we're about to talk about, they look to keep them there. That was a headwind to our safe money. I talk about it so I'm going to move on. I talk about it in the newsletter, but as I did the newsletter, I was like, wow, this was really an interesting year because you had a headwind in the fixed income safe. You had a headwind in the equity stuff which is expected. And it was basically, those of you that are in listen only mode, I pulled this off the BLS, and this is, the Consumer Price Index print. The Federal Reserve, they didn't expect it to, basically no one expected it to go up as high as it did, and then hang there. Now, we've had another print or two since, and it hasn't really come down very much. We can talk about the hanging there. But what that's done is that's given the Federal Reserve impetus and cover to keep rates high, to go fast, and to stay there. Now, interesting, in some of the dialogue, we're starting to hear the Federal Reserve now come off of some of this next. Okay, what am I talking about? The Consumer Price Index is what's giving the Federal Reserve cover to keep rates higher for longer, which is fine. It was a headwind for our fixed income investments, and a big headwind because of the speed. We basically went from 0 to 4, maybe going to 5.5 on the very short end of the yield curve, and that put pressure on the long end as well. Well, this Consumer Price Index being hot or up there, as that prior graph showed, was what gave it the impetus. And this is the shelter component of the Consumer Price Index. Long story short, the way they calculate this is very, very lagging. It's like almost a 2-year lag. So this economy is slowing, but the CPI is still printing higher and higher and up high numbers. For the first time, we heard the Federal Reserve acknowledge that. They said, hey, we understand that these are lagging indicators. Don't know what that means, but other than we've been kind of talking about this, and it's mentioned in the newsletter. And I also mentioned that, much of that, they're not, rates, the majority of the rate increases are very, very highly likely behind us, both from a tightening standpoint and from a fixed income and equity standpoint. So can that mean that the majority of the badness is behind us? Could. We still have some rain clouds ahead of us. Okay, this is a heads up post, and I thought I wanted to get it out in front of everybody. Estate tax laws, not to be confused with federal income tax laws, which everybody knows. Estate tax laws are what is calculated on the value of your estate. It's a Form 700 or 709, 706 form. And it is basically tallied up on your assets minus your liabilities. And then there is a federal estate tax. When I first entered the business, it was at $500,000. Can you imagine? $500,000. Anybody with an estate value of $500,000 or more had to file an estate tax return. I mentioned that the IRS is having trouble. Some 15 to 20,000 people are still not finished with their 20 and 21 returns. Can you imagine if they lowered this estate? What's garnered this post is that currently we're around 14 million, it's 13.9 million in estate, and with a little bit of easy estate planning, you can double that. Okay? What happens is at the end of 2025, if no laws are changed, this number is going to go down to 7 to 8 million. That's what is planned. We're keeping an eye on to see if they change it, if they move it up, if they move it back. This is something you don't want to change your estate quickly for or way in advance, but it's also something that takes a while to do because there may be some sophisticated planning that's done. Okay, yeah, it's not till 2026. 2023 is here in just a few days, and I want to thank everybody for hanging with us. It's got a little bit longer, about 6 minutes, but wanted to put some context. There was really some personal information. As you can tell, I'm casual, but I've got I broke my webcam when we put in the new desks, so I'm having to use the laptop webcam, but I've still got my good mic this time. We want to thank everybody. I wish everybody a happy holidays. We're kind of in the middle of the holidays right now. Again, this will post. I sent the newsletter out early so that it maybe would have some shelf time, and then now we put that, couple that with this video that hopefully you like, notwithstanding the silly hair. And wish everybody a wonderful 2023. And as I said in the personal reflections, I want to thank everybody for the wonderful comments, the confidence. Just occasionally people will just send us an email and say, hey, thanks for everything. We really appreciate that. We're not asking for that, but we appreciate it. We look forward to a great 2023, and we hope that you have a wonderful holiday season. Thank you so much, and we'll talk to you again soon.